This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with David Weaver of Cityside Ventures. David, thank you for joining us.
You're quite welcome. My pleasure.
Great. Can you tell us a little bit about your background? What did you do before starting to invest in early stage companies?
Well, I came out of the corporate world. My first 10 years were with a surgical products division of Johnson & Johnson in sales and marketing and setting up global sales and marketing in Latin America as well. 10 years there, and then about a 2-year stint doing a turnaround for division of Warner Lambert, a surgical products company on the West Coast. J&J office was in Boston. I moved to San Jose area, did turnaround. Then I joined my first startup and learned what that's all about, leaving the corporate world. That was in 86, 87. That moved me back to Troy, Michigan. And there I came on board as the vice president of sales and marketing, helped build sales marketing team, did clinical trials, helped raise angel money, which was brand new to me. Never had to do that in a corporate world, just had justified the money was there. So I met angel investors for the first time, helped raise a venture round, and was part of an IPO as well. So I had a taste of all the different levels of fundraising. Then I started doing some consulting, and after living in the East Coast where money was connecting to startups like Boston Scientific, some of my colleagues from J&J were early into Boston Scientific, and then living in the Valley area for about 4 years out there, seeing money connect in Silicon Valley, again, come back to Michigan, my home state, and see a huge disconnect. There was a lot of wealth here in Southeast Michigan, especially from the automotive industry and other folks, but they weren't doing deals. You know, the deal with them was maybe a brick and mortar tool and die shop or something like that, not technology companies. So a lot of arm wrestling to get people to understand what technology was and do that. So in 2002, I really started the first group of angel investors in Michigan, and was a founding member of the Angel Capital Association, which was formed shortly thereafter, and a charter member of the Michigan Venture Capital Association. So I've been in the deal flow stream for a long time. CEO of a couple companies raising money as well. So I've been on the side of trying to raise money from angels, and then running the angel group, Birmingham Angels, we started last fall, and putting money into startup companies on that side. And we're looking to do a fund eventually as well.
So what excites you right now?
Well, what's exciting right now is in spite of inability to meet face-to-face and have small meetings and stuff like that, we're still finding a lot of entrepreneurs that are still cranking away, trying to move the companies forward, find some exciting solutions to problems that are real. And we're finding our investors running across wanting to write checks. Got money sitting on the sideline that's not going to go anywhere in the market with the market craziness and real estate the way it is. So they're looking for nice deals, and we're doing matchmaking.
So what's your advice for people investing in startups in the early stage? What do you tell them to do before they write that first check?
Well, if you're not part of a group, statistically, it's going to be difficult for you to get a win. Because if you're just trying to do angel investing on your own with maybe a couple of friends and do all the due diligence necessary on the finance side, the competitive side, the technology side, the patent side, all that stuff, you spend a lot of money. Finance people to look at the finances and everything. You're best off joining a small angel group or being an angel fund where you have group intelligence looking at the deals, can help on the due diligence. Some angel groups around the country do the back room for their investors. They still want to kind of dig through the company themselves after they see the due diligence that is done for them in the group, and then pull the trigger on their own. It's I find a lot of people like picking their own deals, and if you're in a large enough group, they can do what's called special purpose vehicle investments. Say you are brand new to this and you kind of earmarked, okay, 100K is my play money for this year. I can afford to lose. And I know once I'm making investments, like 3 to 5 years before I can liquidate it, hopefully I can for a nice 3 to 5x return. Well, if you get a group, you might be able to do special purpose vehicles where you put 5 or 10K into a company, which is normally never going to work. Most companies raising at least 25, 50K as a minimum investment. So as a single investor, you run through 100K pretty quickly to try and do those deals on your own. But in a special purpose vehicle, everybody can pony into that, and all of a sudden it gets 350, 100K. and you're in a lot of deals that way.
So you see a lot of startups come through. What's your advice for those running startups? What do you tell them to do before they go raise that first check?
You really need to validate with a wide audience as you can with the money you have that what you want to sell, service or product, is going to be accepted in the marketplace with your perceived solution. A lot of folks have a great idea, and oftentimes it's technical people that come up with a company just because of their focus on their education where they are to get the skills they have. They don't have the business skills. A lot of companies fail on the take it to market strategy. They don't have people who know how to execute. You have a great idea, but you need to find barriers to entry. It's either IP or trade secret or something like that. And then you have to have a team that's going to take it to market. Who's going to do the heavy lifting and get out and talking to customers and convincing them to buy your product or service? Some companies put together a nice team, but they forget, oh, well, we'll just hire somebody to do that. Oh, we know people are going to buy it. Well, take your word for it. We want you to have validated and show us.
Great. So you talked a little bit about angel investing here earlier. How do you see the industry evolving for angel investors? Where do you think this is going in the next 5-10 years, and what will look like then?
Actually, I haven't had a chance to talk to the Angel Capital Association, but I'm a charter member of that, as I pointed out. I wouldn't be surprised right now with conditions the way they are. We're going to see more angel groups growing across the country, because just spoke to somebody the other day that was representing a lot of family offices. And they said there's a lot of dry powder sitting on the sidelines right now looking for deals. And they're not looking for real estate deals or some of the other things that are out there putting things in the market. They're looking for angel deals. The nice thing about angel deals, which is early stage, mostly pre-revenue or early revenue, is that the companies have reasonable low valuations and you get a nice equity position in the company. And oftentimes we encourage our angels to be so-called smart money. Bring more to the deal than just your money. If you have industry experience where you can help the company with technical issues, first customers, other financing contacts and stuff like that, we love that. It helps take some of the risk off the table. So we encourage people to do that. But for companies, they really need to think through what they're doing. And for angel investors, work as a group. Like I say, join a fund or get a group that's active, and hopefully a group that does the back room for you, so you have less heavy lifting and have more fun.
And so what's the biggest change you see coming up now in the angel investing world?
Yeah, you asked me and I kind of got sidetracked on the last question. I think there's going to be a growth in angel groups across the country just because there's a lot of deals there and money waiting to be in things where they get a nice valuation, nice return. So deals, we're seeing numerous things across the transom right now, independent of solutions for COVID. There's a lot of technology out there that's solving some. We just recently are looking to put some money in a local company here that's addressing something that's in the retail space, which is normally we wouldn't touch. But they're putting together a solution. So if you walk into like a Best Buy and you're shopping for a large screen TV, rather than having 6 or 8 different sizes of TVs to pick from, Big Buy now has put together like this 80, 90-inch screen, and we'll put different size screens and mark off the distance for like standing, like if you're being in your living room or something like that, to see what screens best fits you for where you want to sit in your residence type of thing. And they put everything there. A lot of places aren't carrying the inventory anymore. People want to order online or off a kiosk and stuff like that. And so dynamics are changing for ordering, and people find solutions to help the retail industry and the consumer have a better experience. So we're looking at life science deals, software deals, all kinds of deals that are real solution solvers, have demonstrated that there are people willing to pay for it because it brings real value.
Well, so let's talk about your investment thesis in more detail. What exactly is your criteria for pursuing a deal? How much revenue do they need? What sectors do you want to see them in? And what else do they need to bring to the table?
Well, we like them to be raising around less than $2 million if possible, and be for some of the early folks in there. If they come to us and they're saying we're raising a $10 million round, we're probably just going to walk away from that. And if they come to us and they don't have a lot of evidence and saying we're a $10 million valuation, probably going to walk away from them as well. Like rounds that are less than $2 million, so that if we can take part of it, say we only take $250 of the deal, We don't want to worry about them raising another 1,750 to close around. We want to know that we think that we can quickly syndicate this with other folks and get the round closed so they can get to the next milestone. And we want to know the next milestone bumps the valuation on the company. If it's convertible debt note, we want to know that when they step it up for next time, we're going to have a discount and have a nice bump on the valuation of the company going forward with our money in it early. Most of the deals done nationwide are still convertible debt. There are still people doing price rounds, and we'll look at either one. We just want to make sure that we're in early and that they're not raising hundreds of millions of dollars. We wouldn't touch pharma deals because normally it's hundreds of millions of dollars. That's a VC deal. And we'd rather find groups small enough that they don't need maybe more than one round of VC or none to get to gross organic sales with revenue that they make on their own and then be acquired.
So you see a lot of startups out there. What would you say is the main challenge most startups in today's market face? What do you see them struggling with?
They're still struggling trying to find early stage investors. We've seen some angel groups even in our own state that are acting more like VCs. They want to have the company have sales already and some significant sales. Most of us, that's not angel deals. Angels where you take the risk and help the company get to their first sales. VCs are normally waiting until you have revenue and they come in with $5-10 million on top of that. Angels come in with less money on that. We want to see deals that are small enough that the total raise might be overall $10 or $15 million with later rounds, so that we still have a nice position at the time of a liquidation event, at the time of an acquisition. We prefer acquisitions and IPOs.
And so are there any particular sectors or applications out there today you think are really good opportunities for investors to pursue in this time frame?
Yeah, I think there's still sectors we're looking at is wearable technology. There's more and more things that are being worn or part of your vehicle or carry-on items and stuff like that that have technology in them that are solving problems and giving feedback either medically or tracking or whatever is appropriate on that. So wearable technology is one area that's going to continue to grow. Agri-tech, there's a lot of interesting things coming out of the U.S. and Israel and agriculture technology, solving world solution problems for disease conditions or measuring different parameters in soil or crops and stuff like that have a payback on them and are great. We're still looking at a lot of life science deals that are addressing problems. I just saw a deal coming out of Israel recently that was solving a cardiac problem where they're trying to get to the inner space on the cardiac heart muscle itself to get inside the sheath around that pericardium and get in that space, which has been problematic for cardiac physicians, cardiologists, and cardiac physicians, and they've got a solution for it. I think we're going to have them pitch to us pretty soon. So we're seeing things from all over the U.S. and a lot of stuff came out of Israel as well.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I think one of the things I mentioned early on is that there's some of the angel groups now are starting to form funds as well, because they find that there's still a number of investors that have a net worth but don't want to attend Zoom meetings or face-to-face meetings and pick their deal. They'd rather put their money into a fund where the heavy lifting is done by the fund managers, like a VC fund, but as an angel fund. So it still gets in the same space as you would an individual in a group environment. But in a fund, like we're looking to do a $10 million fund, if you're in that over the life of the fund, you could be in 20, 30 deals. And you never do that on your own. To get that many deals in all different kind of technology sectors and different levels of company growth in that fund. So it's a good way to be like a mutual fund. You spread the risk over a lot of deals, increase the opportunity to have 3 to 5x return on your investment on a number of companies with that number of deals, like 1 out of 10 on your own, which is kind of difficult to do.
Yeah, it's a great way to get diversification is to go into the fund. So it's a good opportunity as well. So how best for listeners to get back in touch with you?
I think going to our website or my email, which is listed that you have there as well, at Cityside, dweaver at cityside.com, citysideventures.com. Great way. I'd love to reach out. Always looking for more investors looking at great deals coming out of the Midwest, and more companies to run through our proprietary software called SitePitch, which really helps us get deals done in less than 60 days, which is outstanding for angel groups.
Well, great. We'll add that to the show notes. Want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you, Hall. Really appreciate the opportunity and great things you're doing here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.